Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup. Hold on, really quick. I just took a loss in my dollar MEX, and I'm actually going to close out the pattern in play, and I'll show you the reason why. First of all, we're going into and it stinks. I've been hanging on this thing for a week, and it's like just not working out. And I mean, it could eventually work out, but here's I'm gonna give you guys like the big issue with the dollar Mexican peso, and why I just closed that out for a loss. If you look at the dollar Mexican peso, we are going into the Banxico meeting. We are now breaking below the 618 retracement. Stocks are very strong. I can't fight that tape anymore because we are seriously right at the all-time highs. And you can see I've got the problem with the S&P right here, right where we're at, is that if the S&P breaks out, the only choice in FX right now is to be short dollars, right? That's like your only trade. And so, or I mean, I guess you could be long, euro yen or, something like that. That's probably not a bad trade either. But the fact of the matter is that if we break out, think about like a move above 3,400, is there any stopping the market above 3,400? How many people are going to have to rush in and start getting, just like long equities, right? I mean, you're going to get people chasing. You're going to get stops triggered. We could get, I'm hoping, and I know this sounds like a little crazy, but I'm hoping we get some sort of blow off top in the market. I mean, that to me would be awesome, right? Because you get everybody chasing the market here, and then it does one of these, rips up to, I'm just going to be a little exaggerated here, rips up to like 3,800, and then comes back down. But something like this would just shake out everybody, right? And if that happens, but you have to think about what happens in FX if that happens. So, and we've got to prepare for it. I mean, yes, this is a very pivotal, like where we're at is extremely pivotal in the market, where we currently trade. The S&P right here. We could reverse and show a double top, which in my opinion, it doesn't seem like it's going to happen. Or, we just, rip higher and really just, take out any stop that's above the highs. You get everybody in the market, and then what happens? What happens from there is the currency is just, the dollar gets pummeled. And let's not ignore this for a second. And hold on really quick. I'm just doing something. Oops. Okay. Let's not ignore the fact that the dollar index is in a broken down state. Yeah, been hoping there might be a double bottom here if stocks would turn around. But if stocks don't turn around, look at what relative strength has already done on the dollar index, right? Relative strength has already worked off the oversold conditions. So for us to continue, and I'm being a little exaggerated here, for us to continue lower in relative strength, that could totally happen, right? So I guess the point of the thing is you have to be really careful with stocks, because stocks are, the trend is higher and volatility is low. And real quick, you can look at, like, let's pull up, and I'm going to pull it up for you guys here. Just give me a second. Okay, let me move it over. Here's the daily sentiment from yesterday. Okay, this is the DSI. So the DSI from yesterday, we had the S&P at 85, NASDAQ's at 76. that still has a lot of room to go. I mean, if the S&P decides to break out, we could go to 87, 88, 92, 93. I think I've seen DSIs in the 92 to 94 range on the S&P in the past. Where does that put the S&P? On a DSI reading that's just crazy. It puts us higher. Anyway, and that's why I think you have to be really careful being long the dollar if that happens, because the dollar index is probably going to come under pressure. So let's talk about the euro a little bit. I did pick up some euros right here. The euro, nice strong move, and we hit basically the what we were talking about this morning, the 161% extension, 786 retracement, that confluence allowed us for a little bit of a pullback. The 38% retracement comes in at 118.05. That looks like it could be tested, right? And if that gets tested, that could set up for a B, C, D move. And the euro, remember, we currently have a what might be a double top, but flip side is we could have a double bottom, and then you get a range extension. Range extension puts us up at above 120. I mean, this range is 117 to 119, so it'd be 119 to 121 would be a complete range extension. But targets would be 119.70, which is the 127% extension of this move. 161% extension of this move is 120.40, 120.50. Those are all, frankly, just doable if the S&P really comes unglued here. So, I as much as I wish the equity markets would just turn around and just take a dump, in all actuality, it looks like they're just going to rally, and they're going to continue to rally and really squeeze. And if they really squeeze, you just have to think about what the FX implications are. That probably puts the cable, top side squeeze above 132. The Aussie will probably make a run for 72.50 to 73 cents. Kiwi, would make a run for the 67 cents again, maybe even higher. Dollar Canadian, which is breaking down. I mean, the dollar Canadian, I was hoping we get some sort of reversal if we got back above 123.30. But look at the risk reward here on being short. If you really think the equity markets are going to go higher, or let's just say they break higher, okay, and don't even make any assumptions at this point. Let's just say it breaks higher. Look at the U.S. dollar Canadian here. Okay, we've already broken this longer term trend line. This trend line comes into play, and I know a couple guys in our chat room are looking at it right here. This all comes into play around 131.80. What if that breaks? 131.80. Next thing you know, we're trading at 128 or 126. Who knows? Again, this is just with equities doing their thing. I mean, could the dollar Canadian really start to see a significant pullback? I'd argue, yeah, I think it's entirely possible. So again, I'm just going to state, equities look strong. They look like they want to break out, and when they do break out, if they do break out, the S&P breaks out, there's nothing above it. I mean, there isn't. That's when you start talking about, a really massive short squeeze. I mean, think about, I guess you could go back to the old, remember the old megaphone, right? Where does that take us? 3,500? God, could you imagine? I mean, we've gone so much further than I thought we'd go already. And the thing I've learned over the last 2 decades, and I always have to remind myself of this, is we can always go a lot farther than you think. And with the unprecedented move that the Fed has had, with liquidity, and everybody's just chasing yield, and people are poorly positioned because they missed the bottom, and we all did. Or maybe you caught it, but most major people didn't. And you look at, take the Jeffrey Gundlachs of the world that have been bearish for the last 2 months, talking about how the market's going to turn. Like at these levels. When we were sub 3,000. The Warren Buffetts that are like, they missed the bottom. Think about that. Look, you've got to show you're invested and be in the game, or you're going to get redemptions. So why can't everybody chase the highs here on a big breakout? I know, it's I know it sounds crazy. Doesn't it sound crazy? Do I sound crazy right now? I mean, I've always talked about a blow off top. I really thought that was off the table post COVID-19. I really, really, really did. Okay, but the blow off tops are what really creates the true tops in the market, in my opinion. This comes in from and Benjamin said, I'm right there with you. Yeah, I mean, Gavin says, hey, Blake, you were trading stocks back in the late 90s, were you not? Yes, I was. I started in 01. So if so, can you remember when roughly it was that many companies started doing large stock splits in the run-up in the 2000 top and NASDAQ? Yeah, I don't remember. I'm sure I could pull it. Like, maybe, let's do this. And by the way, in the chat room, I was showing everybody this Nikkei chart, because this tends to pop up when we are at these levels and debt levels are high, and everybody's like, how in the hell can this happen? Look, this is the green line's the S&P. This is the NASDAQ the Nikkei back in the 80s. I'd venture to guess that we're somewhere around here. I mean, think about, and I mean, I don't know. We might be closer to here, but I think this is what's eventually going to happen in equities. It just ain't happening right now, right? Okay, so the reason why I wanted to bring up this chart, let me get rid of, cancel, let me remove this. Actually, you know what? I'll keep that on there. Let's go to CSCO. I'm going to pull up CSCO. I'm going to pull up Cisco, because let's go over to a weekly. Nope, max, daily, quarterly. Let's go to a weekly, monthly. I got to go back 30 years. Okay, that's fine. I know there's a way to put on earnings. I just don't know how to do it because I'm not a professional with the Bloomberg. Bloomberg's like my word. But I mean, I just remember everybody doing splits way back then, way back when. So, but I can't remember exactly when it is. But we are definitely getting stock splits across the board, and some of these big names, the Teslas of the world, and and I would assume that we're closer to the end than the beginning of this move. But like I said, why can't we push up another, think about 3,400, why can't we push up another 100, 200 S&P points before it's all over? So, yeah, and Gavin goes on to say, Cramer today as a way of getting more people into the market overall. Oh, as issue companies doing stock splits brought up by Cramer today as a way of getting more people into the market overall. Correct. Signs of possible blow off top to come. Time-wise thinking here, etc. Thanks. And yeah, and Gavin, and that's that would be my, my thought process is, man, there is, there's a risk that we do some blow off top, right? Um, and I'd love to see it, probably more so than anything out there right now. Is I'd love to see, the S&P rally 5% one day, 5% the next day, and then give it all back. And then and it, like if it's up 5%, like let's just do the math here, and let me pull up a daily chart and let's do this. Okay, so let's say we get a rally that goes like this, 5% one day. Here we are trading at 3,500 on the S&P, and then another, 3, 4, 5% the next day, just like a straight up move, and then a quick reversal. Then it's over at that point. Then it's like, okay, that's it. But it does feel like that's what we're doing. And I wouldn't want to be in front of I wouldn't want to be in front of the market right now. All right, guys. Hey, remember, if you're listening to this after the fact, come join us in the chat rooms. I'll see you there. For those of you that are listening in live, thank you so much for your continued support. Appreciate each and every one of you. I'm so irritated about the peso right now, but good luck. I'll talk to you soon. All right.